It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. Tuesday evening, July 28th, 2015. Squeezing out the last few drops this wonderful summertime month of July. I hope you guys are having a great week for us so far. Before we jump into tonight's charts, I got a jam-packed newsletter in store for you guys and gals. Lots of trading opportunities setting up right now across all four of our favorite markets. Before I jump into today's charts and give us some strategies for tomorrow, I do want to remind you a couple things here. First of all, everything I talk about tonight, I teach to all of our students here at School of Trade. We use all of these same principles and techniques in our live trade room, which opens up Monday through Friday at 8 a.m. Eastern Time. Check out the free trial on our website at schooloftrade.com. You can grab a link to our free trial right on the right-hand side of the page. Also, please make sure that you're watching this newsletter video on our trading blog here at sidewaysmarkets.com. There are 3 reasons why it's in your best interest to get over to our blog. If you're watching the video right now on our YouTube page, there'll be a link right below right inside the video description. It'll take you over here to our blog page. There are 3 things here for tonight's newsletter. First of all the charts you see me using tonight, you can download all the charts. Every chart I'm going to show you in tonight's video, you can download those charts, have them ready for you on your own computer by following that link right below the video. Second thing, upper left-hand corner, I've got a free pass for you. If you're not a member of School of Trade and you'd like to get a free pass to attend our live trade room, just click in the upper left-hand corner. And of course, last but not least, there were 3 things here. All I need is your name and your email address to add you on to our nightly newsletter mailing list. That way you never have to worry about missing another newsletter. I'll send you a nice friendly email every evening right around 7:30, 8 o'clock Eastern Time, let you know the newsletter is ready to go out. All right, guys? So don't forget here, 3 things here on the blog. Download today's charts for the newsletter, grab your free pass, upper left-hand corner, and register for our nightly newsletter mailing list. Now, don't forget, too, if you grab the free pass or if you register for the mailing list, please don't forget to check your email inbox. I'm going to send you a verification email to make sure you're not a robot, make sure I get the right email address. And also, one thing about this last night, I got a notice last night our email delivery service had some sort of malware associated with it. Apparently some folks were getting a big error message. It is not my website. It has been since resolved by Aweber. But just be aware though, my website is clean and tidy. No malware, no viruses, and we take that actually very, very seriously here at School of Trade because, like many of you, I spend a lot of my time on the internet and I do want to make sure we are virus free. So please be aware you are completely safe navigating to schooloftrade.com, sidewaysmarkets.com. We aggressively attack virus and take it very seriously. All right? So I apologize about any alarms that may have been going off last night. I didn't find out about it until this morning. Has been resolved though, so we should be back on track for today. Also, jumping in for tomorrow, just a heads up here, we get a news alert for tomorrow, Wednesday, July 29th. Got a couple important news events to keep an eye on here tomorrow. First one's going to be the inventory report on crude oil. Second one's going to be the FOMC meeting announcement. Basically, what that means is, first of all, talking about crude oil at 10:30 a.m. tomorrow morning. That tells me between 10:15 and 10:45, you can really got to be careful if you're trading the black gold tomorrow morning. I always like to sit on hands after 10:15. Then I give it at least 10 minutes after the news comes out, let the dust settle, catch up on the cycle, as we say here in our trade room, and of course, get back in the conversation. Also, after about 11 o'clock tomorrow, we're going to be shifting our focus to the FOMC meeting announcement. Now, we started the meeting today. It's a 2-day meeting, 8 times a year, the Federal Open Market Committee, yada, yada, yada. Everyone's waiting on the announcement here tomorrow at 2 o'clock. Typically, what happens is markets are going to give you some good price action until about 11 a.m. It might be a little bit earlier tomorrow, give or take. So keep an eye on the price action. You know where I'll be. I'll be trading in our trade room, which opens up at 8 a.m. with all of our students here at School of Trade. But I do want to remind you guys, though, if you're out there on your own tomorrow, please be aware if you're a crude trader, it's after 10:15. Everything else, it's after 11 o'clock. And then, like I always say, if you've never seen an FOMC meeting announcement before, I would recommend, I wouldn't even think about putting real money at risk until you see at least 6 of these. Now, that's a little conservative, I realize, but guys, there are two news events out there that have dramatic, long-lasting implications in the markets we trade. One of them is tomorrow at 2 p.m. Eastern Time. So I always tell my clients there are so many opportunities every day to trade consistent, liquid, low-risk, high-reward opportunities. Tomorrow at 2 o'clock is not one of those. So if you are new at this, be aware. Tomorrow, again, after 11 a.m., and then it's really difficult to tell how late after that news comes out. It may take you into the end of to the afternoon. So I always kind of play it safe on Fed Day, as we call it. 8 times a year, you got to sit on some hands. All right. So get to it early tomorrow. I realize it's enticing tomorrow afternoon to try to roll the dice and play FOMC roulette, but just be aware though, there's deadly consequences to your trade account if you get trapped or caught on the wrong side of this trade. Okay, it's easy in hindsight, but getting into moves without those issues of liquidity, that's the problem. Your stop's not going to hold if this thing starts whipping around. Honestly, tomorrow, everyone's going to be reading between the lines trying to figure out if September is when we're going to get that interest rate hike. So it may be, it's a summertime FOMC. It may be a little bit of a lull. It may not be as dramatic as we're used to seeing the other 6-7 times a year. But again, for all the new traders out there, 2 things for tomorrow. Inventories on crude, remember, after 10:15. And then for everything else, really after 11 a.m., you really got to be careful. And again, I wouldn't recommend rolling the dice after that news comes out. It's a mover. It's a mover. Don't say I didn't warn you. And if you do, make sure you wear your helmet, all right? Yeah, that's right. All right, let's jump right into it here today. I realized last night I stuck the S&P all the way at the end last night in the longest video we had of the month, right? I'm sorry about that, making you guys wait for the S&P analysis last night. Shall we begin here with the E-mini S&P? I'm on the 12JJ right now, on the 915 contract, and just as we expected, I mean, this is pretty much as expected. We got the correction off the low, like I said last night. We found ourselves yesterday evening looking at this extended move down into consolidation. Of course there's going to be some profit taking. Of course there's going to be some bargain hunting. Today they blamed it on earnings reports, right? Tomorrow they'll blame the drop off of it on Chinese data. Guys, again, potato. There's a million reasons why why the news media will try to rationalize why this is happening. It's quite easy. We saw the chart. I didn't need the headlines to tell me this price is going to go higher today. So seller failure, right, and buying those pullbacks, that was definitely the way to do it today, just like we talked about in last night's newsletter. So looking at this for tomorrow, S&P is bullish after consecutive sessions in the red, which means sellers will be looking for buyer failure to sell back to recent lows. And buyers, you guys have to stay patient and wait for the next deep pullback. Let's play that game, what if price rises, what if price falls? And keep in mind here, we got this trend going lower here. That's relatively easy, right? We overshot the low of that channel, went up, tested the overshoot, came back down, couldn't retest, and took off to the upside. That gives me reason to believe here we're going to have a little bit larger correction than we may have bargained for at the beginning. So now we draw out the channel going higher here. We clearly have a bullish move on our hands. Overall trend is still down. Remember, I'm not going to call this a real bullish trend until what? Until we hold the pullback. If we can hold this pullback, then you got my attention, buyers. Remember, guys, this is the rule of thumb. As we're going lower here, and again, you can apply this kind of illustration to pretty much everything, right? We're going lower, and then bam, we take off to the upside. Are we immediately bullish? No. Anybody can put together a one-day rally. I will call this bullish, though, once we hold a pullback. Once we hold this area right here, once this area holds, then okay, I'm starting to buy into this move now, okay? In my opinion, we got the break here, right? This is kind of a blurry channel here, so I'm not going to call that the breakout. I'm going to call this one the breakout. Can you hold? That's the question for tomorrow, and you can see I've got my line in the sand. 77 3/4. That really is the line in the sand. If we can hold above that level here, we should be good to go here continuing. If we get below that level, then of course it's really anybody's ball game. Let's play that game. What if price rises? What if price falls? What if price goes sideways? If price goes sideways right now, I'm looking for traps on both sides ahead of FOMC. So if we have a sideways range tomorrow, if we go in on an entry chart, right, a fast time frame chart here, if we see a sideways range here tomorrow, which is it's not unlikely, let's put it that way. I can't say it's likely, but I wouldn't be surprised. We have FOMC tomorrow afternoon. If we do get a range-bound market, I'll always look to fade the highs, fade the lows, buy lows, sell highs. We have one of those going on in gold right now, so stay tuned for gold, and I'll give you a good plan for that on a good example. If we do go sideways, members, if you know what I'm talking about, right? Traps, right? Fake out breakouts, fade those highs and lows. What if we go higher? If we go higher, we're going into definite overbought territory here on the S&P, and we're also going to dig into some of these resistance areas. So kind of a double whammy here for the buyers. This is why I said the buyers really need to stay patient. The word of the day for tomorrow for the buyers is to stay patient. Now, you can be aggressive on this, but the easy money here right now, again, price goes higher. I'm going to look for the buyers to try twice and fail and try to sell this thing off that high. Again, knowing that that long-term trend is still down right now, we have to give that the benefit of the doubt. Also, we're up near the highs of this short-term channel, and what was the term again? Rotation, right? Rotation. So we rotate from the top to the bottom, from the bottom to the top, and then where do we go next? Back down to that bottom, right? So if you're a seller, you're in a great spot to be right now, up at these highs. Look for the buyers to try and fail and sell it back down. And if I'm going to sell this sucker, I'm definitely got some profit targets waiting for me at the line in the sand. This channel low, depending on when we get there, right? That's going to be a nice juicy area right here, right? For a target down off those highs. If we go higher, you're looking for buyer failure. If we go lower, here's an interesting one. If we go lower, buyers are going to try to take nibbles here at these support levels. Okay, if we go lower, buyers will be looking for opportunities at these support levels. If you're a seller, you know what I'm going to say, buyer failure, right? Because that trend is bearish, we have to err on the side of the sell side. So really be patient, buyers, until you get down around these channel lows. Right? I mean, I really have a hard time saying to be an aggressive buyer until we get down around those channel lows. I'm expecting the sellers to come in here. Again, I can't predict tomorrow, but I can definitely wait and see what we look like here. Again, buyers will try. If they fail, sell. Buyers will try. If they fail, sell. I would imagine, though, this 63.5, this area right here is where you're going to start seeing more buy pressure come in, and that's where you're really got to be looking at this to be a buyer again. All right, guys, time will tell here tomorrow, though. If we go higher, that's where the easy money's made here. If we go higher, buyer failure at these highs. As we go lower, sellers, you're waiting for buyers to fail at support. Buyers, you're staying patient for opportunities here at those support levels below. And I would definitely be keeping an eye out if you're a buyer of the S&P right now on those two green boxes, 72 3/4, 63.5, and especially the low of that channel. Don't forget, this is a market that will be affected by FOMC tomorrow. If it goes sideways, fade those breakouts. All right, let's keep going. Moving from the S&P now to the black gold, to Texas T, the crude oil futures. You can't really see this very well, but that is crude oil, CL. Here's a 16 JJ bar. Yeah, no worries about rollover anytime soon on this one. We're good to go. What are we going to do on crude? Well, again, like we said last night, really the name of the game right now on crude oil is every time it goes up, look for buyer failure and take it right back down. And that's exactly, I mean, look at this chart. Look at this chart. Is this exactly what I talked about last night in the newsletter? Bearish trend, right? This is exactly what we talked about last night. Comes off that low, buyers try once, twice. When they fail, I can sell right into those stop losses. I mean, look at that. That's exactly the illustration we used last night to kind of suggest what we were looking for. And well, I think you can fill in the blank here. Buyers try once, they try twice, and then look out below, right? Coming right back down. Rotation, right? We rotate from the high down to the low, back to the high, and then any guesses? Back down to those lows. We got plenty of targets waiting for us to the downside. Don't miss this 46.52 target. We came close enough to give it a smooch this morning. I mean, literally, it tested almost all the way down to it, and you could feel the string just got pulled. There's got to be some profit taking, and of course, we'll be looking for inventories tomorrow. What's our plan for crude oil here right now? Crude oil bearish and rotating off the highs of the bear channel, which means sellers are looking for bull traps at support levels as we go lower, as well as if we try to make a run at new weekly highs ahead of the inventory report tomorrow morning. Guys, this is one of those times when we got major news tomorrow that directly affects crude oil. There is going to be some analysis paralysis. There is going to be some sitting on hands, some self-fulfilling prophecy. Remember what I said earlier, 10:15 tomorrow morning to 10:45. That ultimately is your be careful time. Really, 10:45 is the only negotiable time, in my opinion. As of 10:15, I'm done with crude tomorrow until at least 10:35, 10:40. Usually it takes about 10-15 minutes to get that price action to calm down. It is a summertime market, so just be aware things are going to be a little bit illiquid, right? There won't be a buyer for every seller, especially as we go into, what was it again? 11 a.m. Why? Because of FOMC. What time is it tomorrow? At 2 p.m. Eastern time, right? So just remember, this is going to, tomorrow, if I had to guess right now, my guess would be tomorrow's a range-bound scenario here on crude, and it's an early in, early out. We got the API number. They were expecting a flat number today, and they got negative 1.9. Not a lot to really sink your teeth into if you're a speculator ahead of the DOE number tomorrow. It's a little bit difficult to tell exactly what's going to happen up front, but we'll be watching for it tomorrow. If I had to guess right now, I would say range-bound market tomorrow before inventories, and then we get to sit on hands through the FOMC, because you know that Yellen's going to make some comment that will get everybody up in arms about the interest rate debacle, or not debacle, but debate, right, later on this year. Is it going to be September? Is it going to be December? Will it be next March? Right? Nobody really knows yet. So maybe it's tomorrow. Who knows? Another reason why we got to stay patient and wait for that report to come out. So we're rotating off the highs. Let's play that game again. What if price goes higher? What if price goes lower? Well, again, if we end up going sideways here, I am fading all breakouts, right? If it goes higher here, fading all breakouts. That means I'm looking for failures. I'm looking for traps at the lows. Again, if it goes sideways, where do you think the best direction would be? Sell the high, right? Sell the high. We're bearish. But I will be looking to fade both directions here tomorrow with a significant higher probability at the sell side, the top of that range. What if price goes higher here? If price goes higher, this is definitely where you're looking for those bull traps, right? This is definitely, and it definitely might, right? We get a lower than expected API number. There's a lot of analyzing going on ahead of that. I know, don't you love the English language? There's a lot of analysis ahead of that news report tomorrow. Who knows? We could walk into this thing, and this thing could be pushing 48.5, possibly to 49 tomorrow morning before we get that DOE number. So bottom line is, if we do make a run for it, I'm looking for bull traps. And the word bull trap just means I'm going to wait for the buyers to try to buy short-term pullbacks, and then I'm going to sell right into their stop loss. It's the easiest way when price is rising. And then after it makes the move, we'll follow that with our wave trades, right? Our trend following trades. So it's reversals, it's failures, and then if you miss one of those two, then of course it's wave patterns coming right back down. What if price goes lower? If price goes lower, just like we talked about on the euro, right, last week, as price goes lower here, we know we're rotating down towards ultimately trying to get back down to that low that we made from today. We're going to try to test these support levels down bottom. So if we do go lower here, this is another example where buyers, this is really going to be your best shot here to get this thing coming off these lows. And you might get it because, again, if this ends up being a range for tomorrow, we may see a little fake break out and then back in. What I'll be watching for, though, is to see those buyers fail. Buyers fail. Buyers fail, right? So in a downward trend, in a bearish trend, every time we test these short-term support areas, again, if you're a seller, you're staying patient, you're waiting for, what was it again? Stop losses to get run, right? And then sell into the stop. Buyers try, stop losses get run, sell into the stop, right? I definitely will stop selling, though, at 46.52, and I'll wait for more information. Who knows for tomorrow? It's a Wednesday inventory day, and just to spice it up a little bit, we get an FOMC announcement at 2 o'clock, right? So it's definitely going to be one of those days where we're going to come in tomorrow morning. What time's the trading open? 8 a.m. Eastern time. We'll take a look at it right in real time and see, okay, what's the, kind of take the temperature of the market and see what are we feeling like today? Where are we, first of all? And then we'll formulate our plan. So again, as price goes higher, bull traps. As price goes lower, buyers are going to be coming in most likely right in this area here, 47.5, right? If they're successful, they're going to make a run for those highs. Again, here's the one scenario where I would expect buyers to be successful. If we do see a trading range going into it, because you'll notice there's a bullish move into that range. So this will be bear trap. What I'm talking about is a little bit deeper here, seeing those bulls try and then failing a little bit deeper without the range. Members, if you're a member of mine, you know exactly what I'm talking about, right? We get a bullish bias going into a trading range. But overall, though, if it just goes lower without a trading range, we have a bull trap waiting here at 47.50, 47.67, 47.35. Again, nothing has changed with me on crude oil. I mean, literally, I can look back. There's probably been 2 weeks the entire year this year, right? There was. I'll definitely give it to the buyers. It was just a few months ago. I recall there was a few days in a row there, a couple times this year, where we've had the bulls in full control. That's been about it, though. Really, the theme of 2015 is every time it goes up, look for those bull traps and sell it right back down. It's one of the easiest ways to make money in markets that are trending strongly. Let's keep going. How about the gold? Now, remember I told you earlier, gold has a great example of what if price goes sideways. Real quickly on gold here. Gold, again, ahead of the FOMC report tomorrow. If there's one market that is going to be dramatically affected by the FOMC, it's the U.S. dollar. Now, because the U.S. dollar has, of course, its fundamental correlation, negative correlation to gold, we know that will be the next on the list. What will be after that? The euro will be the next on the list. So we're going U.S. dollar, gold, euro, and then the rest of these markets will work itself out right afterwards. So bottom line is, if there's one market tomorrow where you really recommend to be careful, this is one of them. And then the other will be that euro, which we'll cover here in just a few seconds. Also, we get a rollover alert. You're going to start seeing a little bit lower volume as we go into the last few days of this 8.15 contract. We're going to skip the 10.15 contract and go to the 12.15 contract this year. This is one of those funky years on the GC, so be aware of that. Don't need to worry about rollover for tomorrow, though. Tomorrow, what you got to worry about right now is this trading range. Let's follow the plan here. Gold is trading sideways within a bearish trend, and with less than 24 hours from the FOMC announcement, our best strategy will be to buy the lows and sell the highs of the short-term range using reversals and failures. So somebody puts a gun to my head and says, Joe, you're trading gold tomorrow. What direction? Well, we have a bearish trend. So I will err on the side of being a seller here if that's all I could do tomorrow. What's the next idea here? Well, as you can see here, gold is acting very gold-like ahead of the FOMC report, right? It's tucking, it's in its fetal position right now ahead of the FOMC report. And for definitely good reason. We've got a lot of chatter about interest rates, and that's definitely going to affect the dollar, and that will definitely affect gold. So what's the plan? Again, assuming this thing has not been broken into smithereens by the time we come to our desk tomorrow morning after 7 a.m. Eastern time in the U.S. session, that was I better do some more cardio, get that breath back. Anyways, I'm looking for failures. Right? Here's my range. Price goes up, sell it back down. Price goes up, sell it back down. That's the easier money. That's the higher probability. Price goes down, buy it back up. Price goes down, buy it back up. Okay, so what am I talking about with failures and reversals, right? Failures and reversals. Well, remember, markets have to try twice. So let them try twice, fail it, bring it back up, right? Let them try twice, fails, bring it back down. That's the plan, Stan. That's the plan for gold. Again, gold's definitely going to be one of those markets. If you haven't traded FOMC before, tomorrow's not the time to start on the gold market. I'll tell you that much. We'll have more to talk about that in tomorrow night's newsletter after we see all the shenanigans that comes out after the announcement tomorrow. Wrapping up here on the euro. Another one of those charts that, boy, oh boy, did we get correct last night on the newsletter. If you recall last night, my exact words were, expect them to run it down, most likely now run it back up, right? Little double stop loss here, and then whoops-a-daisy, right back down again. So we are about 1/3 of the way from exactly what I talked about last night on the newsletter. I swear, guys, it's just simply understanding how these markets work. No crystal ball needed, no headlines needed, no magic fairy dust, no smoke and mirrors. It's just understanding how the markets work. And it also helps that I've been watching these charts for a little bit less than half my life at this point. So the experience is right there with me. And that's the experience I look forward to sharing with you and really shortening the learning curve when you come out and join me as a trader in the trade room. All right, let's wrap it up here. Euro just pulled back to the lows of the short-term bull channel, which means buyers will definitely be trying to retest the highs, and sellers will wait for these buyers to fail for easy selling opportunities. Going with the Tong, no, what kind of party is this? Going with the long-term trend. There we go. Okay, so a couple of things here. Somebody puts a gun to my head and says, Joe, what direction you got, man? What direction you got? All right, well, I'm definitely going to be a bear because you can see here we are trying to rotate down. So with that said, bearish long-term trend, we're rotating up into these highs right now. Remember this from last week? Overshoot of the low, overshoot of the high, right? And you can see, okay, so we're still expecting it, right? That's why we talked about this last night. That's why we're going, all right, it's gonna most likely run off these highs, fake break back to the high, fill the overshoot, and then find its way back down. We'll know more about that as the week progresses. So I'm definitely expecting this market to make a run for those highs, especially now you can kind of think of, again, tomorrow FOMC. If whatever comes out of Yellen's mouth happens to be bearish for the dollar, it'll send this euro straight through the roof. So again, buyers are definitely going to be expecting here to be pushing to that high. If we do go higher, buying those pullbacks, right? Wave pattern, but do not buy into those highs. Up at that high, I'm going to wait for the buyers, take a little bit of a piece of, try to take a chunk out of this high and then look for the failure and sell it back down. Again, I do expect this market, pending anything crazy comes out tomorrow. Remember, tomorrow's FOMC. It's a huge question mark for us right now because nobody on the planet, well, I guess there are a few folks out there, right, that know what's going to happen tomorrow. We don't know what's going to happen tomorrow. We have to wait like everybody else out there unless they're sitting at that table at the FOMC meeting. So we know to expect the price to try to go higher, right? Buyers, you got the green light here right now, buying those pullbacks on the way up. And then if we get up to those highs, that's when you want to be looking for the buyer failure. Sellers, I'm looking at you to sell these highs now. Okay, now there's one more shot here. If we fail right now, that's where we can look for more immediate selling opportunities. That would really be the only spot here where I'd recommend being a seller just yet. And what you're going to look for is this. At least here's what I would look for. I would look for, as the price comes down, I'd look for the buyer to try to buy it and fail. So if you're going to sell this sucker, wait for it to really dig into this area down here. Look for the buyers to try, and then when they fail, that's going to be your cue, right? Because it's just, there's too much down here. There's too much support here for you just to sell blindly into it. You get the 200 moving average, you get a range support, you got big round number. So really the only time I would recommend selling is after we really dig into this thing and then see buyers try and whoops and fail. Because then that way, that will take care of testing and getting those buyers in. Remember, there are going to be a lot of buyers waiting to buy more of this as it goes lower. Get them into the market, stop them the heck out of their trades long, and then drop this sucker. I'll be very surprised if we end up going lower tomorrow. I would expect this price to make its way higher, and then we'll formulate a plan, most likely tomorrow night, the night after, as far as how we're going to sell these highs. Guys, don't forget, the euro is another one of those markets that's going to be dramatically impacted by tomorrow's FOMC. So trade it carefully tomorrow. You know the plan, right? You know the plan. All right, guys, wrapping things up here. I want to thank you so much for being a part of our nightly newsletter. Please, please, please feel free to share this information with a friend. Don't forget, download today's charts, grab your free pass, register for the mailing list, and if you got some free time on your hand, it's summertime, of course, check out our free trial here at schooloftrade.com. We've got a great free trial and, of course, 3 levels of membership and someone standing by 24/7, 365. I'm going to teach you all about how I trade as part of that free trial. I look forward to working with you guys. As always, thanks for being here. My name is Joseph. We'll see you same time, same place in the mañana. Happy Fed Day to you guys and gals. Don't forget about that inventory report tomorrow, and I'll see you back here same time, same place. Adios, amigos. Bye-bye for now.